Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, June 25th. Michael Boutros with you on the horn. Abhishek, good morning to you. Aurelian, Eman, good morning. Hope all is perfect. Thank you so much. Peter, SPX is on the docket. Pooja, Ty, Jay, Kamal, Marco, great to see everyone here in the room. Nice Euro Kiwi trade, right? Pooja, that worked out really well. I'm glad I shot that out the other night. So on the menu, obviously we'll hit DXY real quick, see where this decline is. Kiwi didn't give us the pullback. Pooja, I hope you kept some of that position that you were talking about yesterday. Obviously limits on the swing trade have hit, but it just kept on going. So you got one quick pullback yesterday rather. If you got an opportunity to get back into that, we'll talk about dollar CAD, Aussie CAD, sterling, still holding resistance, gold. Okay, first target 1433 has been taken out. Euro, Euro Kiwi, dollar Swiss, Aussie, and crude. Let me know if there's any other questions or trade setups you guys want to review. Good morning. Request for today. Gold today showed me some weakness, beginning a pullback. Yeah, we'll take a look at gold. Abhishek, Jaya, good morning to you. Limits at 66.20 while I was running around for my passport, says Pooja. Marco wants to take a look at Euro Yen. I did take a gander at it yesterday. Marco will take a look. You're short gold from 1332. Appreciate your amazing update. Eman will take a look. Okay, so first things first, a quick look at the DXY. The lower parallel that we were talking about is catching some support. Again, I just want to highlight this chart, the weekly. Watch this week's close. Now, technically, like I said yesterday, we did close Friday just below 96.14, which is, again, the yearly open, right? Low week close comes in at 95.66. That's sort of the next downside target. Here's the index now. So it looks like a legit break. Momentum is kind of flattening out, which is getting me a little concerned. But as it stands right now, resistance back at 96.14. We're still looking for the possible extension down to the March lows, the 786. That gives you 95.74. And then the low day close 95.55. So use some caution here. Here's what the intraday chart looks like, and this is my concern. So this formation, while not the cleanest thing per se, has been pretty decent on the pivots. There's a lower parallel. That was the level that we highlighted earlier in the week. So as it stands right now, here's what it looked like. We're right here at the lower parallel. So do you get a rebound of sorts? I wouldn't try to fight it with a long position per se, although I must say, just between us guys here in the room, there are some classic traders that you like to fade. And when they turn, it's typically a decent signal. So I just want to say there's a lot of people who are just now getting bullish euro. Might be the timing from a sentiment standpoint for a little bit of a pullback on price there. Let me just show you real quick the IG sentiment index on euro. Here's what it looks like. So it's still pretty constructive, but the short side, the guys trying to fade this thing, are starting to flat out. So when this starts to flatten out, typically it's when you get a little bit of a pullback and then the rally. And we'll look at euro in a moment because euro is basically still holding resistance from a slope standpoint as well. So at the end of the day, nothing really changes for the DXY levels. Okay, we're still looking for a possible. We were saying look for a low early in the week for recovery to sell. It's still kind of the idea. It's Tuesday. You kind of came to the lower parallel. If you get some sort of recovery, look for 96.31, 96.14, both of these levels initially. This is also sort of the weekly open at this point as well, so you want to keep that in mind. But not much really since the start of the week, right? We're still holding that near-term support. If we get the tag into 95.74 or 95.55 on the drop here, guys, and you're not already in a position, don't chase. I really need to stress that more than anything now. You're heading into the end of the month. You've had a big outstretched move. Not the time to start getting short your dollar. Not the time to start to get long euro when we've already made this move at the high. So just use some caution here. Patience pays in this type of environment. But yeah, DXY still holding support here. Still in support. You got some commentary by Powell later today from the economic outlook and monetary policy, but it's not going to be something I think will be major market moving, but could be a little bit more of a tell if we get some more info from the Fed. Combo tie, here it comes. So what does that mean for euro? I guess we can go a little bit out of order here. So let's just go to euro real quick. Here's number 2. So remember, euro weekly chart looks like this, right? We're talking about the 1393 level is the first level of major resistance. We popped through that just briefly, kind of like probing through, and then we pulled back again, but we're trading there right now. The 2019 open here, unlike the DXY, which has already probed it, here's the opening yearly open for euro at 1445. That's the next upside target. Again, on this stretch, it's tough. It's tough to try to, even get long here, but here's what it looks like on the intraday. Or let me show you the daily first. So the same type of idea, right? Here's the daily chart. Really nice slope. This is also the 618 retracement of the yearly range. Here's what it looked like into the start of the Sunday open. We were talking about 1393, and then again, that upper parallel converged right there. A little bit further out now because of time, but you can see we're still getting the same result. So inflection here, okay? As it stands, this is a divergent pattern in the daily momentum indicator. So the risk is there. As I just said, I'm just scanning through the Twitter handle sphere. A lot of people trying to get bullish here, euro. It's not where you want to get bullish per se. You already had a pretty decent breakout. You've had 4 days of consecutive advances that covered essentially the entire monthly range for June. So the only thing to do here, in my humble opinion, guys, again, this is just my opinion, is you have to wait for the pullback to get long. 1350 is the first area of support. If we breach through here, you got another 45, 50 pips to the upside into that 1445 yearly open resistance. So the levels are good. We're looking for some sort of pivot here. Here's the intraday chart. Again, trigger break to the downside. If you're holding shorts here against that high, you're trading Asia. Look for 1375. We just missed it on this decline, so probably just leave the stop against the high. Still looking for a tag of that. The weekly open, okay, comes in just lower. I was looking at this when we got in, so 1370 into 1374. It's your weekly opening range low, the weekly open, and the 786 retracement from the decline off the highs that we made back in March. So first area, break below that, maybe the 75% line or so, but the broader trade is still constructive. It's just, I can't get long up here. I can't get long up here. So questions on the euro. Again, there's not much euro data until consumer price index, which comes out on Thursday. So you're pretty clear on the docket as far as any type of European event risk. As it stands, it's a tough call, but it's still, for me, the exhaustion pullback. And guys, it's funny because into the close of last week, we were looking for the same thing here. Remember that? We said, look, if the euro climbs in 1317, look for the pullback. We'll try to buy that. Didn't really get it. It ripped right through this thing. It's the same type of deal here, guys. If it rips right through, there's not a trade. We got to wait. Otherwise, the pullback, looking for opportunity. 1350, 1317 max for where you'd want to find this thing, find support. Any questions on euro or DXY for that matter, 1 and 2? Okay, so these things getting a little bit quiet after last week's move. No surprise there. Here's Kiwi, and from last night's update. So the big area is 6640, 786 retracement. You have just a parallel resistance there. Again, divergence into the high last night had me thinking, look for the pullback and let's try to buy that ripper. It was really short-lived. I mean, the pullback in Kiwi. Hold on, guys, one sec. Okay. The pullback in Kiwi was really short-lived. Here's what it looked like. So, man, kind of just a zigzag ripped through 6607. Here's 6640. Obviously, we've popped through it, but we're kind of straddling that region now. Kiwis is another one where you can't get long up here. You can't get long up here. I'm not saying that necessarily you want to be short either, but it's basically where you want to be booking profit. 6620 is where we took it on the swing. You know, this is sort of still a big region. My problem with Kiwi, excuse me, is this. So, like, is this a break or is this a consolidation? This is actually going to be a lower high as this was a higher low. And then we just sit here sideways for another couple of days. We've had 6 straight days up. Okay. You can't press it. You can't press it beyond here. 20 upside targets are still clear on the break. 66.84 is going to be pretty close to those swing highs. Decent pivot in price. Yearly open resistance is 67. I do think we get that eventually if this is the true breakout type of V bottom recovery. I mean, it doesn't get much more V than that. But from here, it's just another one where we have to wait it. Now, interestingly enough, the crosses are what are becoming more interesting. And then you saw this big outsized move in the dollar. And now as the dollar sort of exhausts and you start to see that start to get really mature, you start to shift and see that the crosses are doing really interesting. So Aussie CAD is something we were looking at. Euro Kiwi played out perfect for a Kiwi cross to play. Kiwi strength happened to take back in the dollar. If Kiwi pulls back, where would you re-enter? And if we break through, where would you look to fade? Pooja, great question. The big fade spot for me is 67. Okay, not just because it's the yearly open, but just above that, you have the 200-day moving average. You have the 50% retracement of the entire yearly range. That should be a pretty a major pivot. So where you would look to fade on a breakout, that's sort of the big area of resistance for me. Entries, I mean, if you get a pullback, Pooja, 66, if it holds, big figure, 618 retracement of the recent range that we're in might be a decent area. Really, the lower parallel is what I would love to see. Although, you know, it's getting messy as resistance. But this would be sort of the first area I'd look for support. Don't forget you have the RBNZ on tap, okay? Tonight, essentially, Wednesday, tomorrow in New Zealand. Looking for a hold at 1.5, but again, the commentary is always the mover there. So another dollar cross puts us in a wait and see approach. Nice move on the swing trade. Let's see if we can't get some exhaustion here. 65.80 is the near-term bullish inval too. Yes. Yep. So let me do this for you, Pooja. So don't forget, that would also be an objective break of the weekly opening range low, which is like 65.87 or 65.86. So yeah, 65.80 is what I would use. Make sense, Pooja? All right. Okay, great. Thanks, says Pooja. Yeah, you're more than welcome. Here's dollar CAD. At support still, pressing it this morning. And I want to see what happens right here. So here's the idea for dollar CAD. This is big support. Remember the daily chart, you had the 786 retracement of the advance off the yearly lows. You had the lower median line parallel for the slope, which was right there as well. The bigger area of inflection on the downside where I'd love to see a big reaction, as we said, was 31.23 into 31.05. That's the 100% extension. So 2 equal legs off the high. And it's the yearly low day close that we registered back in February. So that's sort of the bigger region where I'd want to see sort of inflection of some sort. Looks like we're going to break down lower here. Again, if you're not already short, there's nothing to do. I still think this could exhaust today. So watch for downside exhaustion on a move here. But end of the day, we're probing not only structural support, but also just the objective monthly lows. Remember, this one had a very clear monthly opening break. So looking for that late month low, it's the 25th. Be wary of the downside heading into Friday. And that's what happens, guys, when, just a quick side note, we've been talking, uh, Jamie and I have been talking to you guys about how tight volatility has been, that contraction in the ranges that we've been seeing um, to historical multi-year lows, right? So this breach, this massive explosion of volatility that we're seeing, this is when markets go trend, real trend. So unfortunately, for a near-term trader like us, the only issue is that the entries are very few and far between because the market takes a direction and just goes. Instead of getting the bounce and pullback and back and fill that we love, that gives us structure and opportunities to get back in, play the same ranges over and over. You get these one directional moves. Um, and if we're not in it, again, we have to stay reserved. Capital preservation is everything. So it's very simple to get, easy to get sucked into these markets and kind of really want to be in it. Obviously, the dollar breakdown, we've been talking about it for months. We finally got it. Do not just, start chasing. We'll get the opportunity. Markets will always offer more opportunity. Don't have FOMO here. Ty says they had to have a vol release. Now it must break the lines other than backing and filling. Yeah, I mean, I get exactly, Ty. Exactly. You get that cascade effect where the markets actually start to propel each other forward. So, man, I want to be short dollar CAD. The idea was you look for possible exhaustion 32.38 or 32.58 early in the week. We didn't get there. It is what it is. If we get the break, look for 131.23, 131.05. Big, big, big zone. And again, even on the near term chart, a parallel of this slope, if you take this pitchfork, high, low, high, a parallel of that same gradient, one touch, two touch, low day close, 100% extension, same zone, critical. Now, a lot of people like to, I guess I don't want to get into this right now, but a lot of people like to equate the sort of dollar CAD oil correlation. And I get that idea. But even with oil, and we'll go over that a little bit later in the session, I do have that coming near term resistance as well. So it's really hard for me to get excited about just pressing short dollar CAD from here. Just a side note. All right. Aussie CAD. There's an interesting cross that I'm starting to look at. We looked at this not too long ago, earlier in June. I'm still of the mindset that this thing finds a larger recovery. So I want to see where this pullback comes into play. Here's Aussie CAD. I guess let's start from the top down on the weekly charts. And here's what Aussie CAD looked like last night. So the basic idea here is that 91.20 was huge support. That was the low we closed for last year. And it's also the exact 100% extension of the decline off that high we made in December. So two equal legs down and the low we close, add to that basic slope resistance. Here's the slope off the highs from June of last year. Just a parallel extended from that January low, that flash crash we made early in the year, converged right in that spot. So worth a bounce? Sure. The daily chart showed an outside reversal, off that region. Okay, so an outside day reversal off of support, confluence support, saw that pop higher, a basic 38.2 of just the near-term decline from June, just this month's range essentially, converges right here near those former swing lows, former swing support, or slope support rather, just above 92, like 92.16. So I think it might be worth a larger recovery towards that zone, but here's the intraday chart. And here's what it looked like last night. So that was the weekly, that's the daily, here's the intraday. So the idea here, again, you were seeing divergence, okay, into that high last night, price action making a higher high, the oscillator holding highs or making even a slightly lower high below 70, decent trigger, right? Shifted the focus lower. Now we're basically break even on this one. It's not really doing anything so far and moved a little bit lower, a little bit higher. Just basically looking for a little bit of a pullback, 91.53. Ultimately, you're looking for possible entries off one of these two levels. I don't quite think you get all the way down here, but we want to flip to play a little bit more of a recovery here after that outside day reversal. So at this point, and I don't want to like work too aggressively with this because we don't know, again, this is going to be sort of a concrete high yet. But the 50 of just the near term advance comes in right on that low day close. So again, 91.50, 91.53, and a 618 like 91.40 would be close to that swing high. So another area, if you get a stab or wash out, look for exhaustion off one of these two regions. If you're holding shorts, just watch the weekly open, probably just peel off most of it there. But I want to see a hold off one of these two levels if we're going to rebound. So does that mean, the CAD starts to fizzle out on this dollar CAD move lower? I don't know, but I'm not chasing that move. So of the CAD crosses, this is where I think a little bit more of my attention is near term for trying to fade a small portion of that position. Make sense, guys? And then hopefully, you'd want a scenario where you start to get some structure to the advance or something to kind of put us into a little bit clearer of a breakout play. But first things first, let's see what kind of reaction we get off this key support in Aussie CAD. All right, that's number 5. Number 6 from last night was sterling. So we talked about this briefly last week. We threw together this slope, not really knowing if it was going to play out or not. Now I'm still not like a crazy fan of the pitchfork, just because we're basically haven't seen too many pivots just yet. But here's the long and short of it for sterling. Oh, by the way, I don't know if you guys have seen Bitcoin, but we'll visit that if anyone has any questions on it. I was just scoping that out this morning. Here's sterling. Okay. The only thing that matters here is yearly open resistance. It's been resistance for 4 weeks, not including this week. Okay. Right here, resistance, weekly resistance, weekly resistance. Last week we failed just ahead of that. Here we are probing through. Very, very clear level, an objective level, right? So the weekly chart basically has us in a very well-defined range. The monthly opening range here is super well-defined. Here's your monthly open. You set a high, you set a low. We're testing the high again. Just so happens that resistance level at the high is pretty damn close to your yearly open resistance at 27.54. And the level is pretty clear. Again, one that you want to be very cautious of because there's a lot of headline event risk here, but we're basically looking for the break. Here's sterling on the intraday chart. So again, it's the same setup play basically as, by the way, watch this candle today. If it breaks this low and makes a move lower, that would be an outside day reversal off yearly open resistance. That would be near-term bearish. Again, DXY at support. Kind of want to see a little bit of a give back here to get back in, but long and short of it, looking for a little bit of a kickback here for sterling. Just adjustment to that retracement. See where that 38.2 comes in. Okay. Trying to pinpoint area of interest for entries. I don't think I would do it along the median line here on this pullback. I want to see a new low register beyond this one. Okay, so before you start to even try to fight this, we'll need a deeper correction. And I don't think it gets quite down as 26.45 either. So we'll have to see if this structure gives us, or if the decline gives us any structure to find some slope along this region. Ultimately, we're looking for the pullback to get long. Monthly opening range preserved right into the close of the month. Abhishek says, yes, for Bitcoin. I got out of it 2 days ago after 1 year. Would like to know your view on it. Abhishek, it's super interesting. Yeah, we'll take a look. We got time. Okay, so any questions here on sterling? look for the pullback. If you're already short, well, if you're already short, listen, I play things super objective. So if you're already short, the weekly opening range low would be your first peel off. It take a little bit off there, stops at break even or better. If we do get that, I don't like where the 38.2 is, just because whenever we draw retracements, I don't like just to jump and chase the retracements blindly. I'm not, that kind of a religious Fibonacci player. But when the levels need to give us pivots in historical price action in and of itself. So the 38.2 kind of sailed through it last week with ease. It's not that big of a region. If we break these lows, that would be where I would look to say take a little bit more off, if not the majority of any shorts that you have. Does that make sense? And again, guys, we're heading into Tuesday with a very clean weekly opening range. So objectivity and price action is crucial here. Okay, gold, number 7. Here's gold. How are you ladies doing with this trade? I know Pooja and Iman usually get involved here. So there was nothing to do until 1433. We've now gotten that. The next major upside target is 1451. Here's gold on the weekly charts. And here's gold from last night. I just gave you the daily chart because there's not really much to do on a scalp basis here, guys. So the first major level we talked about was 1380, 1391. We closed a weekly close above that last week. I still was a little bit skeptical on it, but we were obviously deep in overbought territory, breaking uptrend resistance. That's typically the sharpest part of the move, guys. And boy, did we get it. So here's the Ripper, 1433. Still nothing to do here as far as trying to jump into any new long positions. For those of you who are short, who I get a message from earlier, Iman. So first of all, I love where you got in, 1332. I had 1433 rather. I think you mean 1432, right, Iman? Not 1332. 1433 was a big, big region, right? It's going to be the swing high that you made in the late calendar year for 2013. Nice objective level. The 100 off the low from 2015 is 1451. That's the next major upside target. From here, here's what it looks like on the daily chart. So the concern obviously is that you're still in overbought territory. Market has a lot of push behind it. If you're trying to play it from an exhaustion standpoint, and again, this is the first region that we were looking for. Overshot it by a little bit. Here's 1438 in the high. Here's the intraday. So let me just zoom out a little bit. Here's a 240. So you're getting divergence, price action with a higher high, the oscillator with a lower high, both reference points above 70, typically a weak signal. If you get that 70 break on the downside, would be the onset of a nice little pullback, I think. Now targets, Eman, let's see what we can figure out here. Okay, I'm gonna dump this slope. I mean, objective support is still 1391, but again, I don't know if you get quite down that low again. Look, it has all the hallmarks of exhaustion. You got a 3-point support touch there in momentum that just broke on divergence. Pretty decent signal. But I'd still want to be pretty nimble on this one. Yeah, I'd want to see like another high, low, high, something to give a structure. There's just nothing here. There's just nothing here. This could be a near-term consolidation into the highs. You look for the break, maybe another exhaustion blow off and a pullback. Don't get too aggressive on the short Eman? Eman says, yes, you're right. Sorry. Oh, about it being 1432. Yeah, I figured as much. I'm short at 1433 after hearing you yesterday. Abhishek, nice entry. Even better, Abhishek. Nice job. Can I have the weekly again for gold? How to count only 3 waves? Ty, what do you mean? Here's the weekly. Three waves off the 1276 low. You're not going to see that as clear on the daily chart or on the weekly chart. Yeah, here on the daily chart, it does look like it could be construed as a 3-wave pattern, sure. But this could be 1, this could be 3, and we could get the 4th before the continuation. Typically 3 is going to be your biggest stretch of the wave pattern anyway. Does look like it could be a 3-wave pattern from here, but I don't think it's mature enough. The advance is not mature enough. We haven't gotten any back before exhaustion here. He says that's my thinking. Could be. But so what are you insinuating, Ty? That the broader trend is lower and this is corrective? Because that's what you'd be assuming by suggesting the 3-wave to the upside. On the bottom is on the first. So here's what I would say: 1451 for me is really the 5-year bottom. I see what you're talking about. 1451. Look, that I don't think that far out. For me, 1451 is going to be the big test. That's going to be the 3-wave off the actual low from 2015. If we're talking about just equal legs higher, and slope might help that as well. Can't even get a decent retracement here to try to find some near-term targets for you. Eman. Here's what I would be looking at. Weekly open support is right there. And I'd be just looking at that Friday swing high. Some soft targets there for you. So let's just call it 14, man. 1398.80 is going to be the weekly open support. But that swing high, which was capped early in the Asia session before the breakout yesterday, that's 1411. Both levels I'd be looking at. Pooja says, from another angle, how often have you seen a top form when the weekly isn't overbought for gold? Very good observation. And here's what I would say. First of all, being overbought on the weekly chart in gold is not a common occurrence at all, let alone how deep in overbought we actually are. This is the highest record that we put in momentum since the record highs that we put in 2011, guys, literally. So markets can obviously, I'm not sure what you mean by that question, Pooja. Markets can obviously peak while momentum isn't overbought. That's not necessarily the concern per se. And obviously this was this is like financial crisis type of occurrences, but it does have the potential just to see an exhaustion here, which is why 1391, although being $30 off the high, $40 off the high, wouldn't be all that outside the realm of possibility for just a near-term pullback within this breakout. Can you do silver as well, please, as we are at gold? Michael, absolutely. 1391, of course, but on a full, but a full-on reversal? No, I don't necessarily think you'd get a full-on reversal. Guys, first of all, this weekly chart, right, is pretty clear that we've been working under the assumption that there's a broader return here, right? This has been in an uptrend since the 2015 lows, I would argue. Um, and obviously this is a multi-year breakout, right? You had a 3-point touch resistance here, which broke out here. So if this is still a consolidation pattern, the measured objective move of that is way up beyond 15. Now it's not going to be a straight shot, but this is sort of the first area of interruption. That's my point. That's my point. I don't trade long enough where I'm thinking whether this is a full-on reversal. Is this the yearly high? I do need to just note that you are coming into a time period for gold, just from a cyclical standpoint, where markets are susceptible to a near-term pivot in price, meaning a registered extreme. So just look at the last couple of years of when the highs or the lows registered in gold. Here's the high registering in July, right? We're a couple of weeks out. Here's the high registering in September. Here's the low registering in August, right? Early August. So you get the point. Heading into the third quarter, there's been a very high propensity for a near-term low or a near-term high to register in price. So not justification to try to fade this, but certainly suggests that, if we head into 1451, that's where you really would start to get concerned of a little bit more of an exhaustion trade. So good luck on the shorts, guys. Again, be nimble here because we're fighting a very strong uptrend. So it could make another spike into it. All things held constant. Yeah, I'd be thinking, like we said, 1433, 1451, both levels of interest for us. Iman says, got you. Thank you. Michael says, thank you. I got you on that. I think the Momo is strong yet. Yeah, for gold, I agree. I wouldn't say it's still super strong, but it's deep into overbought territory, which is not the best time to try to fight it just yet. So let's just take a look here for Michael wants to take a look at silver. We talked about it last week. Here's what the chart looks like now. 1550, 1548, still the region of resistance that we were talking about. So the 618 retracement, this is from the decline off the highs that we made in February. Daily chart has 1525 support. Not so much on the intraday, but basically that's where that 25% line comes into play. That's where the 50% retracement comes into play. Here's the scalp. So very similar to gold. It rallied into resistance. And guys, Mike, these are my favorite Fibonacci confluences. I tell you this all the time. So, whoops, 100 off the low, 2 equal legs off the low, a 618 off the high. These typically are my most fruitful inflection points. So you can see that we rallied and ripped right into this here back on the 20th. Failure, really nice pullback. There's the 618 extension of the same measured move, which was resistance, breakout, support. And here's a failure again, 1548, 1550. That's still your level of focus here. I'm going to get rid of that 50. Bullish inval. Whoop. Bullish inval at this point gets dropped or gets, brought up to 15 handle. Bear with me one sec here. I just want to see what this retracement looks like. All right, yeah, let's change that. So that 38.2 for the broader decline. Focus on the 38.2 just for the near-term ascent right here. That's key support, near-term bullish inval, 1507. Yeah, that 2-hour outside reversal here. Is that also a 4-hour? Yes, was also a 4-hour outside reversal off the high. Here's the last time he did that. on the 20th. 4-hour outside reversal, spiked into support. 4-hour outside reversal. And let me just see what this looks like. It's not there yet. Well, even if you're going to be a near-term channel, it still converges all down here. Long story short, Mike, 1550, man, that's your level. Anything you're playing needs to be inflection off 1550. If a topside breaks, you have nothing till 1580. 2017 open, not a big target, but just shy of 16, 1589. It's all about the 1550 inflection. I don't even know if I have a weekly chart on gold, on silver. Yeah. So here's the weekly, all right? A little bit of an unorthodox pitchfork here, just taking off the highs from 2016, 2017. It's a swing high from 2016, not the actual yearly high. But you can see the slope has been pretty clean. Here's that 75% line converging on the 618 right here. Near-term resistance. So sort of like gold, right? Reaching into its first silver region. Sold silver ratio. Sold silver. I mean, thinking gold silver ratio. We'll say something. Abhishek. I don't really pay too much attention to it. Abhishek, I think that you probably get a better explanation alternative to that from Jamie. I don't really look at the silver gold ratio as often. Can you do silver? I got that 1391. Thank you. Hey, more than welcome. Gold is pretty and silver looks awful. Ty, I wouldn't say it looks awful. I just don't think it's as clean as, obviously you're not getting the breakout type of play that you're getting in gold. That's obvious. But the near term levels were actually pretty clean. And we identified this zone last week, 1550, before the breakout, even above 15. Someone here was asking about this. So the fact that we're getting such strong inflection off that region just continues to put the focus on that. Put a bullet to my head, guys. I think this would try to spike through this again and fail on an attempt. It just looks too clean. It kind of just collapsed from here. Totally different outlooks. One is wrong, right? So Ty, I think the gold move is not just being played on account of sentiment, risk on, risk off. The gold move, I think there's a lot of that Fed bid in there as well, right? And the new interest rate outlook, even though it's not so new, but the adjusted interest rate outlook, I think, is going to be a little bit more of a fuel for gold, aside from just concerns of markets. So let me get back to the list here. Did we cover Euro Kiwi? That was number 8. Number 8, Euro Key. Who was asking about that earlier in the session here? Here's Euro Key. So this one was probably so far this week has been one of the best performers of the trades that we've been following. Here's what Euro Key looked like earlier in the week. This was on Monday night. So the basic focus on this as we were opening Sunday was this. It's coming into resistance, plain and simple. 73 is going to be the 618 of the entire 2018 range. Excuse me. Here's the weekly chart. Right? So here's the 618, the entire decline from last year's high. Here's your yearly opening range high. If this was going to be a legit break, you'd think that the yearly opening range, especially because we tested it again here in May and pulled right back off it, you'd expect to see acceleration there. Well, you're not seeing that. 618 held at 73. Daily chart, okay, had the high close on this last stretch right here at 72.74. So right off the bat, heading into this region, you're looking for the possible exhaustion play, right? The 618 tag was very clear. You had a massive outside day reversal right off that region. The high close was 72.74. Again, heading into the start of the week, that's basically what you had tagged as resistance the previous day. Here's what Euro Kiwi looked like on the intraday chart. And this was the whole premise of the setup. You have this near-term slope off the high, which we were following from last week. Nice moves with a divergent pattern into the lows. Recovery ripped on a five wave, it looks like, right into resistance. Again, that high close 72.74 holding. And as we opened up Sunday, the whole objective was, hey, if it's gonna turn, if price is going to correct, this would be the spot. Just based on the high close structural resistance from the slope that we were looking at, and the fact that Friday, that's exactly what capped the advance. So any stops you took against Friday's high, or any trade you took should have had a stop against Friday's high. Looked pretty decent. On the break below 72, if you were holding anything, the stop again would swing back up to that previous high from US trade, which was 72.58. Took out 71.74, and that was sort of the last target I was looking for to see if we can get some sort of recovery off that. It didn't. It cracked right below. That held resistance, and here's the move lower. If you're looking for 71.09 on this stretch, if you're holding anything still, momentum just kind of caught the lows here. So expect some back and fill possibly here. 71.74 is what you'd want to see hold if we're still going to get the 71 tag. But I'm a little cautious here of trying to chase this any lower if you're not holding anything. Really sorry, Michael. I have to disconnect myself as I'm traveling tomorrow in nighttime. Eman, no worries. Always good to have you on board. Obviously, we'll have this archived for you so you can catch the rest of it. I took a second short. Pooja, you're talking about Euro Key? I took a second short. Just a small bit for the year open. Stops at break even and dynamic trailing. Okay. So the year open is at 170.67. What's the thing I want to say to you? Well, let me take it back. I love that region because the 618 of the advance is just below at 70.62. 70.67 is the exact yearly open. And again, actually a basic 236 of this year's range, essentially, right? A basic 236 actually converges on that same zone. So yeah, 70.62 into 70.68, generally speaking, is a beautiful spot. The only concern is that would kind of necessitate a drop below the median line for the broader structure we've been following here. It's the only thing I don't like about that target. So Pooja, watch for reaction at 71, I'd say. You have some decent pivots there. But yeah, from a lateral level, just objective lateral region of support, that's a nice spot. That's a nice spot. Yearly open support, 618 of the near-term advance, 236 of the yearly advance. Resistance now back at 71.75, the 618. We actually haven't broken this low, so this retracement for the advance off last week's low remains intact. 618 highlights the median line there. Can scratch that. So Pooja, for the short to work, you want to see failure here. I'd have near-term bullish inval at 72. I wouldn't want to see this max out beyond 72 here. You have those former swing highs from May. You have the pivot breaks that we've seen just over the last 3 weeks. I'd want to see that hold. Okay. Oh, no way. Is it? Pooja, look at you. Nice. Just highlighting it's also the 100% extension. You're absolutely right. Comes in just ahead of that. 70.80. I'd even be looking at that more than that 50, to be honest with you. Not bad. Okay, so that is Euro key. Nice bounce off nice rejection rather of resistance. Gauging the pullback here, looking for some sort of reaction. Let's just call it 71 into 70, 80, 20 pip zone. Look for possible exhaustion on the downside there. Number 8, number 9, Swissy. Here's dollar Swiss. So we were looking for a low. I think you're getting that near-term low now. The slope is a mess, okay? The slope is a mess. Here's what the update looked like. So Swissy, the whole point, here's the Sunday open as we were opening trade. The whole point was look for 97.44, which is going to be the year 2018 open. It also converged on slope. And if that doesn't hold, look for 97.12. Okay, 97.12 is a 50% retracement. You have 97.16 just above that, which is going to be the swing low that you made back in January. So it's your objective yearly opening range low. You also had the lower median line parallel converging right there. So that's on the daily chart, by the way. Here's the daily, right? That's this region here. That's basically where we just came into. That's basically where we just came into. So you made a stretch low, just a little bit below 96.96. All right, no big deal. Here's the recovery. I think, again, here is very similar. And guys, I feel like a broken record on all these setups. You know, they've exhausted or they've come into regions of possible exhaustion. Be nimble if you're going to play the near-term recovery. More so, look for that recovery to get back in. You know, there's probably a lot more to go on this, but this is the yearly range lows, the 50% retracement, structural slope support. If we're going to rebound, this would be the spot. This would be the spot. So here we are. Nice little recovery from here. Resistance is back up at 98 on a daily chart against the 618 of the advance off last year's low. And you have slope there as well. There's a 25% line. Nice rebound there. The break saw acceleration. Both of those converge right there. Here's the intraday. So at this point, you're heading into Tuesday. You've set a pretty clean weekly opening range into longer term slope support. Look for a break of the weekly opening range for guidance. Again, 98, be a nice level to look for exhaustion. Bearish invalidation at the yearly open, 98.39. That's also, interestingly enough, Friday's high. By the way, on a downside break from here, such a pivotal region, I don't have anything to like 95.88. And that's the 618, the entire advance from 2018. Make or break. Our charts differ. Are you talking about gold, Pooja? Our charts differ a little bit, I guess. My convergence is 10 pips, but good trade anyway. Oh, the Euro Kiwi. Oh, for the 100% extension? Yeah, I'm not sure. It depends on the feed that you're using. I typically work with the FXCM feed, but that's where it comes in. Yeah. Yes, mine's on TradeStation. Gotcha. Yeah, that's probably where the variance is. Okay, so any questions on Swissy? Looking good. Nice trade right off resistance or off support. How deep the rebound gets, look for 98 for initial reaction on this breakdown. Okay, last but not least, Aussie. I'm sorry, I saw someone asking a question on Aussie too. Here's Aussie. And SPX, I got you. Pete wants to look at that as well. So here really quick is Aussie. Very similar to Kiwi in that if you're basically looking for a little bit higher of a stretch before some exhaustion, 69.80 is the 786 retracement that we talked about. I'm not really a fan of stressing this slope on the daily chart so much now as I am this lateral region here. So look, you've been marking divergence since the start of the week. Higher high, higher high, higher high, a series of lower highs. But that's not a reason to try to short this yet. Look for 69.80. Look for a reaction at 69.80 earlier in the week. Man, it's too much to ask, but I would love a reaction play. Like this to me was so awesome. You guys remember this breakout or this rejection rather into resistance? This was the 1618 extension. We talked about the low day close, which is still maintained, guys, by the way. The low day close for the year, although we've dropped all this, is still that flash crash from January, and that's 70, right to 70 handle. Huge inflection range. The lows that we made back in March. That's for me the play from here. If you're holding long anything sub 69.26, sub the monthly open, I just have to stop at the weekly open, and see if you can't get that stretch towards 70. Something new from here would have to be an exhaustion trade, a short off of a stretch higher from here, maybe towards channel resistance, or if you get the pullback, I'd rather be back on the long trying to break out. SPX looks like this. Only a couple minutes left on the session, and we'll take a quick look at crude, euro, yen. I don't know if I'll have time for it, but I'll do my best. Here's SPX real quick. That was number 9. That was number 10. This is number 11. So, Pete and Abhishek, here's my take on things. So, I'll show you this structure in a moment. Here's, I mean, you know, the swing high 29.59. We still haven't closed above that. We spiked through it earlier and pull back. There's not much to do here. The only thing I've been sort of focused on is this. Our near-term levels have just been insanely clean. Whoops. It's just the Momo has been tough to gauge last couple of days. So if this slope is legit, here's what it looks like on the near term. I was looking at this morning at 30. Nice touch here, nice touch here. You would sort of want to see those highs maintained. So if you take the hourly close, reversal, 29.50 is kind of where you'd want to see resistance, and then a move lower. Level of support is the level of resistance that we talked about way long ago, 29.30, 2018 high day close. Remember that was the target for the breakout. It was the acceleration for the clearing of this near-term range. Support just turned ahead of it on this last dip, converges on the lower parallel. And I understand that's bearish, and a lot of people are not so bearish, but it is what it is. We're in this structure until we're not. If we clear that recent high that we just made, right, the upper parallel, fine, 29.59, and then good luck. We'll have to look for slope. I'm just not buying it. I think it still pulls deeper. And 100% extension, even if it's just going to be 2 equal legs, still takes you down 29.35. So that's just my humble opinion. Abhishek, hope that helps. He says, I'm short from 29.59. Nice entry. Well done. What a level. May high. Yeah. If you didn't peel anything off, again, if you get a stab at a deeper low, watch 29.29. At 4 hour, there was a big outside bear candle. Thank you. Hey, Abhishek, you're more than welcome. Peter says thank you. Hey, you're more than welcome. Peter, I answer your questions there as well? He says, yeah, thank you. All right, you're more than welcome, Abhishek. Cheers, mate. Nice entry on that. Watch this. If it gets through 29.50, seriously, just use caution, okay? Because we are pressing highs. It's just from here, I would be hard pressed to do anything on the long side. He says, got it. Okay, so that is SPX number 11. Number 12, really quick, just a gander at crude. Nothing changes from the updates on crude, okay? I still think the same exact levels are in play, and I still think we're on point. I don't think anything's changed. Here's what the chart looked like last week as we were clearing the breakout of this near-term ascending formation. We've been waiting for that tag at 58, 56. I still think you get it, guys. Just above that, you also have the 2018 open at 60 and then the 618, 60.45. So I don't know if we'll get these targets on the stretch, but here's your weekly opening range. Here's the 50% retrace. Still think it's constructive. Give me 1 sec. I just want to see what this looks like. That's not bad. So we'll use this new pitchfork, get rid of the breakout one. So you'd want to gauge, once we spike into a high, you'd want to gauge a retracement on where it falls on these parallels to find out where your bullish inval is. As it stands right now, I'm still waiting for that tag of 1586, 58, 56 to see a reaction there. A topside breach, especially if it comes later today or tomorrow, would still have us looking for 60. Would still have us looking for 60. A little bit tired here. Momo doesn't look all that strong, so be on the lookout, guys, for all of these trades that have extended so far to offer or to risk some sort of pullback into the close of the month. So that is crude. Euro yen. Mike, a promise is a promise, man. Here's euro yen. Euro yen, euro yen. Right, yeah, this thing. So I thought, I'm not sure why my analysis didn't save on this, but what I was just looking at was a simple consolidation. And this looked like it was possibly 3-point touch, but it didn't quite get it. Here's euro yen on the weekly. So on the weekly chart, typically if I'm in a trade like this, just Marco, just for your information, I mean, you know how I trade already, but just what is Momo? Yeah, Momo is momentum, Abhishek. Sorry, trader talk. It's funny because actually Iman is the one who mentioned Momo earlier in the session. Marco, typically when I look at the weekly chart and we're sitting slap in the middle of a range like this, I don't even approach the trade because for me it's just like you're not near resistance, you're not near support. The structure is null and void from the being next to any extreme on the weekly. So from this standpoint, the longer term still looks bearish. Near term on a medium term front, I still think this could give you a little bit of a swing higher. Now here's the problem: the daily chart. I get you on this. This was pretty impressive. You had an outside daily reversal on June 21st off of the lows, off of slope, and turned just pips from the monthly open support. Okay, that's bullish. Today's already making an outside day reversal lower. Typically bearish. So again, near term, I would say this is still in consolidation. You're right slap in the middle, Marco, of the monthly opening range. Here's your monthly open. So your monthly low is here, your monthly high is here. You're literally at the 50% mark of that range. I guess you're sitting on the 618 here. But low conviction trade, man. Something like this I would track. If you get towards the upper parallel, if you get towards consolidation resistance or consolidation support, might be a move, but it's tough from here. 122.32, you're in. Okay, so you're on the short side here. Low day close is right here now. With that 618. So look, I would be just looking at this. I wouldn't want to target anything beyond 121.50, 121.48. It's your low day close, the one that we registered back here on the first day of trade for the month. And then it's also an objective 618 just at this last stretch from the upside of last week's low. Okay. Don't get aggressive on this. I like where your entry is off. You're right against the weekly opening range highs, which is like awesome. But look for a reaction off 2150, 2153. Make sense? It's the neckline from the Head and Shoulders of late May. Yeah, depending how you draw the slope. Interesting trade. We'll take a look at this. The whole problem with this is obviously, as you guys know, is dollar yen. Dollar yen was a great short, that we were looking at it for a while. Our trade idea from earlier in the month was to find resistance at 108.90 into 109. We got pretty darn close, but it didn't quite get there. So Abomination does what Abomination does. That was an objective break that we saw last week of the monthly opening range, shifts the focus lower. 100% extension literally held support for 3 days as we dribbled below, dribbled above. We closed there 2 days in a row. You almost made a doji yesterday, or I guess you did make a doji yesterday. And here's the downside stretch. My problem is their slope. And there's the reaction nonetheless, not just slope. So if dollar yen recovers, that's yen weakness. That's euro yen possibly for a recovery there. So I'd look for more clarity in that euro yen trade before getting too aggressive on it. All right, I'm way over on time, guys. Thanks for everyone who attended today. Again, we'll be back on Thursday, and then I'll be off for a couple weeks, guys. From the webinar standpoint, I'll still be offering reports here and there. Obviously, that week I'm on the honeymoon. That's going to be difficult to I'll follow markets at all. But we'll be back here on Thursday. Jamie obviously will be back on board tomorrow for the midweek strategy webinar. Thanks again, Abhishek, and thanks everyone in the room. Best of luck trading, and I will see you Thursday. Cheers.